Go to my phone, see if I can see us on this on the phone. Oh, we're live. We're good to go. All right, Ranger Rock, can you see it?
No, I don't see nothing.
Let's see what we see. Ranger Rock, can you see it? See echo. You heard that? Somebody's on YouTube or no? Talk to me, Rod.
Is everything working?
Yeah, I just hear myself like delay, like if I have another plays on. See. How about now? I think we're good now. I had the YouTube on the other on the computer. That's what it was.
I think YouTube makes you delayed.
Yep, I see it now. I had it on. I had it on already, but we got it. We can edit that later on. Well, no, how about? Hope you guys are doing great. Let's for whoever's seeing us, definitely we're gonna try to be doing this more often than normal. Mostly what it is, it's just gonna be talking about financial stuff, see how things are going. A lot of the guys here, they have a lot of experience, different point of views, different part of life, different things they have done. And definitely our main goal is going to be just educate you guys on what it is on life insurance and financial services, what is to have a good life insurance foundation. Definitely send us a message if you guys can. That way we can see what you guys are saying, and definitely we can go ahead and start answering some questions for you guys. And of course, we're definitely going to be getting more savvy on these items over here as we go through. We got Mr. Ranger Rod, Bell no, Mr. Johnson Rodriguez, known as Ranger Rod, out of the good state of Florida.
What's going on?
Definitely good, a great guy. Be able to understand a lot of stuff when it comes to a transition from the military. A great mentor for a lot of people out there. And we got Mr. Dimitri. He's going to be in and out, but he's mostly on the high side mode on the whole aspect for right now on that one. But now, Rob, talk to me, brother. How you been?
Everything's good, man. Gonna enjoy this retirement and making sure that my family's future is set.
There you go. There you go. There you go. So no, mostly I got a quick little slide deck we're gonna go through. Something very simple. Mostly what I want to do is just we go over it definitely, and just let's just talk about it. You know what I mean? Let's see what we can come up with and hit certain points. And definitely I want to hear your point of views as learning about this, how this transition is going for you, and how was the big set when it came to retiring from the military on it. I know for me, I retired in 2019. My biggest worry was really on the financial side of the house. You know, just think about 2012, 2013, had an injury overseas. And then from there, I got told when I was being on my recovery, hey, I had 17 years in the service, and I was being told, you're going to get out of the military. I'm like, yo, I'm only 3 years away from my retirement, and you want me to get out now? So that for me was a big awakening. You know what I mean? For me, it was a point of view that I was like, what am I going to do if I do get out? You know, getting out of the military for me was never an option. You know, it wasn't something that I really wanted to how you say, it wasn't something that I was looking forward to it. And then when that came up, I had no financial plan whatsoever when it came to it. So for me, that was a very eye awakening. Thank God, through my savviness, I was able to move around in the system, and we was able to do my 20 years, retire, get my retirement, and go from that point on. But a lot of people are not that lucky. So I learned on myself. What I learned was, how am I gonna handle my finances? What I gotta do to be able to handle my finances, to make sure when the unexpected happen, I'm already taken care of. All my family's being taken care of. All that stuff was the question that came through me, what I was asking myself, and I really didn't have an answer to it. So it took a lot of reading, a lot of learning and experience, and talking to people who really were retiring from the military. So for me, that was the issue that I had when it came through us. As we go right now through this today as a Veterans Day, we all enjoying it, we all seeing it. But I know, Rod, you and I can probably talk about. I remember when for us we'd be deployed, and this day was like a regular day for us. People celebrating. We hear, "Oh, thank you for your service," and we're like, "Okay, whatever. Let me just do what I got to do and get back to my family." And it's kind of hard to understand that portion as we out the military right now. But anyway, when it came to that point, to my retirement timeline, I got told, "Hey, you're not longer gonna get your first and 15. That check's not coming in. Now you're getting paid once a month." Oh snap! My pay's gonna go down 50% overnight. Oh snap! Am I gonna get my VA benefit? I am injured. Well, am I gonna be able to get that money on the side that I'm expecting? What am I gonna do when I get out of the military? I mean, we're already coming from a position that of leadership, of being in a position that we are in charge, to now getting out of the military and just be a regular person now outside. I remember going to interviews. I'm interviewing those people and I'm acting like, I'm still top notch. I'm like, no, you're not ready for this. You know what I mean? At the end of the day, it was me. So being able to do that transition timely for those months, for me, it was very learning experience, because when definitely came the time for me to get out, I had to move myself. I was working more when I was off, because I had to, like I said, I was worried about that money, because now the money, I had to make that money coming in on it. And then, as everybody know, COVID's it, and that was it for it. So I found a niche in the whole system. The niche that I found was being able to do my own business. Me and my wife and I, we started a business back in 2013, a shipping company, and from there it was doing great enough for us to keep our income coming in. But then from there, we decided, what do we have to do now? What can we pivot ourselves right now to do? And we ended up doing, when it comes to it, T&E strategics. When it came to business development, and starting helping veterans. We started volunteering, helping people how to set up business. COVID hit. So now we finally found a niche that we're okay, we're good, we're lucky, we're loving it. Money's coming in, and boom, COVID hits on the whole aspect. TSP, I took that money out, came out, give me the money for my TSP. And then they didn't think nothing about it. So then we went through COVID. It was a big reset for everybody. I mean, at that time frame, what am I gonna do? I ended up doing some app work with my battle buddy down there. Also, were working with Penske and U-Haul, moving trucks around, driving around, moving trucks, being able to get paid on those stuff. So we were hustling outside how to make ends meet over here on our end. And then little by little, at the same time frame, I already has this financial service license, but I wasn't really doing it to the fullest on my end. And when that happened, for me, it was like, okay, it's just another item I'm doing. It wasn't really a big thing for me. Thank God I had good friends of mine from back home that were able to contact me on it, and then got myself into other companies because I was loyal to some friends of mine. As I see them moving forward, I kept moving around agencies and agents. I found a good agency that really took care of me. And my friends from back home were there, and we supported each other. And to me, it was an overnight movement. When I was able to still find a niche that I would still be able to coach, teach, mentor other people, and mostly teach them and be able to educate them and help them on their planning, So they didn't go through what I went through. For me, that was like mind blowing. That was a no brainer on it. And from there on out, it's been growing from that point on. So by that being said, always have a plan in place, but you never know what the unexpected is going to come. You know what I mean? And that is the biggest thing. People's lives change overnight. Anything can happen, where either it will be a health issue or job related issue. Something always going to happen that if you don't have a financial plan in place, we're definitely going to be seeing the headaches. We're definitely going to be seeing the repercussions of that on that one. Okay. On that one. Sorry about that. On that one. So when it comes to that point on, what insurance I had for my family, what foundation I had laid in place for my family when it was time if something did happen to me. In the military, I had no problem. Military, if something happened to me, military would take care of my family. That was no questions. That was my insurance. That was my foundation. You know what I mean? That was for me what kept me okay with it. Once I got out, I didn't have the military. You know, once I got out, VA tells me, hey, if you kick the bucket, guess what? You know, the day that you kick the bucket, unless you don't have a specific plans that you did on the side, the payment stop for your family. I'm like, oh, snap. You know, we have in our family, we have long-term goals. You know, we think 5, 10, 15 years down the road. So our everything that we do today is for an outcome we're expecting 10 years down the road, 5 years down the road, 15 years down the road. That's how we operate. So one critical thing we didn't have was having on the financial side, a financial security in place. If something does happen to us, do we have the financial needs to make sure that our current goals keep moving forward for our daughter? Are we going to have enough income coming in to make sure what we want to do for the foundation that we're trying to lay for our child be available? And that for us was a key aspect of how to utilize life insurance as a leverage in case something did happen to one of us, to make sure that financial foundation was still established and we were able to move forward on that one. So technically, in a nutshell, that's my journey and to be from in the financial service from the time to where I am right now. Why do I saw the importance of it? And then hopefully as we go through this, to talk to each other and find out more how this is going to be able to help us and go from that point out. Okay. And as we got to go through this, Rob, definitely let's jump in. Any questions you have? I think we have another battle coming in a few. Just text me. So as he comes in, he's definitely going to bring some good pointers also on that one. Okay. Any
Okay.
question?
Nope. Good to go.
You're a quiet ranger, man. Okay, so a lot of people ask, okay, life insurance, they don't even know what it is. They only know it's some payment that goes out to a person when they pass away. That's what it is. You know, technically, a lot of people, why do I need life insurance? I'm still young to have life insurance right now. I'm not an old person. Why do I need to have that in place? Well, like I said, you heard my story a little bit. You find out how in my story it was a little bit peace of mind for myself to have in place. But as we go through them, you guys are gonna know there's two different types of life insurance out there. You got permanent life insurance and you got a term type insurance. When I talk about permanent life insurance, it's something that is gonna outlive you as the person. This is a type of insurance policy that you currently will utilize to make sure that that financial foundation is set in place for your household in case something happens to you, not only now, but later on in life. So technically, think about it like a legacy. So if you pass away at the age of 83, you know you left X amount of money already for your family to be able to continue moving forward. A lot of people from our generation will be talking and be like, hey, I didn't get left nothing behind. Why should I leave something behind for them? Best thing I can leave for them, let them make it on their own. Okay, I got it. One thing I'm going to tell you, and I learned this a lot from my father-in-law, and also, and I'm utilizing it, is the best thing you can leave behind to your children is education. You got to give at least given that education for them to know how to maneuver themselves in their life on it. We got to make sure we do that. But education costs money. Okay. Point blank. At the end of the day, costs money. You want to make sure that whatever plan you're making, and you can sit down with myself and one of our agents, we can definitely go over on how you can utilize that for your future. When something happens late, what is that money going to be utilized for your family? What legacy are you leaving behind for them? How's that money going to help your family name grow, continue building from it, and keep going to the next level? Okay, we gotta get out of that rat race, gotta get out of that circling life that we live in on it. We gotta break that cycle. A great mentor of mine, Mr. EJ Pardo, he probably got it from somebody else, but he used to tell us that it's not our fault that we're born poor, but it's our fault if we die poor. Okay. So it's up to us to change that cycle for our families to continue moving forward, laying that foundation to keep moving forward. So permanent life insurance will give that. Will give that and that financial foundation for that family to continue moving forward. Okay. One thing about life insurance, you gotta understand is a contract. The insurance company will pay out what they agreed to as long as you did your part for it, which is like paying the premium. That's mostly it. You pay your premiums, at the time you pass away, that money is going to go ahead and get paid out. There's other benefits that we're going to go over. It's called living benefits that you can utilize on these policies while you're alive. We'll touch that later. But one thing you got to understand that is guaranteed from the life insurance. Yes, I said the G word, and it's guaranteed that when you do pass away, as long as you met the premiums payment and everything's up to date, you're going to be able, the insurance company will pay that benefit to your family or to your beneficiary, whoever you left it to. Okay. That's the beauty about permanent life insurance. It's going to be there. In addition to that, it has a cash value attached to it, which means is as you keep paying monthly premiums into that policy, it's developing a little savings, a little cash on that you can utilize that money to as you see fit. Okay, that money could be withdrawal tax free, not correction, not withdrawal, could be loaned out from you tax free. Okay, and at the same time frame, that money you can utilize that either to self finance yourself certain things, or just keep it there for a rainy day. One thing I always say, if you think of life insurance is an investment tool, no, it's not. It's a foundation tool. Life insurance is a foundation for your finances. It's not an investment tool. So you're going to hear about IULs. You're going to hear about whole life, how we're going to use these policies to retire. You can use them as an additional retirement stream of income. Yes, it has to be set up specifically. So when you're looking at these policies, you got to make sure that when you sit down, you ask those questions. Is this set up the right way for you, not the agent, for yourself? Okay, on that permanent side of the house on it. One thing in additional to that, you got a term policy. Term policy, technically what I say is for a period of time, anywhere from 10 years up to 30 years. Okay. That's how those term policies are going to be working. People say, why do I need a term policy? Well, you might not be financially stabilized to be able to get a permanent policy for a bigger amount. So you might want to get the most coverage that you need at a lower monthly payment. You know what I mean? So you might do a term policy. A lot of this term policy, if you do get that, you want to make sure that the one that you're utilizing gives you the opportunity to convert that into a permanent policy in X amount of years. Make sure you ask those questions to your agents. Get with one of us. We'll definitely go through different of our carriers and we'll find out what best fits your need. So that's mostly how term insurance will work. It's a temporary coverage for anywhere from between 10 to 30 years. And then that's why it is more inexpensive. They're cheaper because of that. Why is the term policy cheaper? Because most likely the insurance company is not going to pay out because you're going to outlive that policy. If you get a 10-year term and you're a 30-year kid, most likely you're going to outlive that unless something significant happens. So with probability and the risk assessment as the company do, most likely that's why it is more of an expensive type of policy. It doesn't have a cash value attached to it and I have nothing like that on it. Okay. Ranger Ron, any questions you might have? Anything you want to add on to this?
No, you're explaining it really well.
Perfect, Ranger. I love it. Rangers lead the way, right?
All the way.
On that one. So as I was talking about permanent life insurance, that was a quick overview. And now I'm going to go into this, like to go a little bit more if we have to, if I haven't hit on the whole different structure. Like I was telling you guys about the permanent life insurance. It has to be structured correctly, depending on what you want. If you want the policy mostly to be a value of money to be left to your family. Okay, security purposes, you want your death benefit, perfect. It could be structured that way. If you want this thing, if it comes, you hear about infinite banking, you will be your own bank. There's some strategies out there between any of those two, whole life or index. You can utilize that, but you got to be careful on that. Not when you're looking at those type of strategies. That's not for everybody. If you're not utilizing that money, those policies the right way, then you're gonna have some issues. Okay. Now, I want to do a quick disclaimer. Not a financial advisor. I'm just mostly talking about finance, my experience with it, on how it is. Definitely, if you're looking at investment stuff like that, you got to look for your investment. Get with a financial advisor. He'll talk to you about how to invest and all that stuff. Okay. These type of products are mostly utilized to give you that financial foundations that you're gonna need for your family or your business or whatever goals you're gonna look at having. Okay, on it. Now, going back to it, as structured correctly. Now, you got to make sure, for example, if you're looking at utilizing this as an income, one thing we always got to learn, if you take out $1 from this cash value from a policy, you want to see what is that money's doing for you. Okay, a lot of say, I'm going to finance my own car. Yeah, you can do that. Finance your own car, pay yourself back. Got it. Remember, it's a loan that you're taking from your own life insurance. So you're going to pay a percentage of or interest rate on it, just like you do your 401k. People say, why are you going to take money? Well, you got your 401k too, right? You can get a loan out of your 401k. You're going to pay your interest out on that same scenario. You're looking at income tax-free money that you're utilizing for those type of products. All I'm saying is when you utilize this money, you got to make sure that money's making money for you. Okay. Reason why? Because every time you're loaning money from your cash value, you're putting in collateral your debt benefit. So X amount of money, whatever amount of money you did take out from your life insurance cash value, that amount is going to be collateralized with your debt benefit, which means if you do pass away during the time that it's an outstanding loan, this debt benefit will still pay out. It's just going to pay out whatever is left out of what you already taken out. So if you have a $1 million debt benefit and you took out a $200,000 cash value loan out because that's what you had on it, that means that you do pass away, the life insurance will pay out the 800,000 because the 200,000 you already paid into it. You was paid out to you while you were alive. Okay, so technically that's how that will work. Okay, just keep that in mind on it. When you do take that money out, you want to make sure that money is making money for you. $1 should make you $3. In the military, we say we always overcome an enemy 1/3. Same thing when it comes to when you do your finance, 1/3. If I take $1 out of my policy, I got to make $3 out of each dollar's coming out. How's that? So make sure you have a good plan strategy in place on it, and then utilize these things properly for you. It's going to give you a lot of advantages on it and be able to good place to put that money. It's going to continue to grow. We can definitely go more into that later on in the different videos and different talks on it, and then we can dissect all these type of products with different companies and all that stuff. But it's the beauty about that is where you want to utilize those type on it. Okay. Talk to me, Ranger. Anything? Hard sight.
No, everything's it's coming out really well. So I think I'll have questions here after this next one, so I can try to link all this up together.
Okay. So when we look into the permanent side of the house on your ask about what's your experience technically coming out? Because I know in the military we had what was the SGLI. SGLI, we had it with the time we were in the military. We always thought, okay, $400,000 coverage for $20, that's awesome. Get to find out that was a term policy. It wasn't, we had no cash value, nothing aside to it, no living benefit. As you came out through it, what was your experience or what was your knowledge of that part?
Yeah, I learned at the end there that nothing's gonna come with me or carry forward. So I wish I would have paid attention to it sooner, but I was able to get another policy with a different company in order to carry me out when I separate from the Army.
Understood. No, and that's the thing. A lot of people do get out. The VA does have a VSGLI is called the Veterans SGLI type deal, kind of like resemble. You walk right into that one when you get out. It's an easy sign here, you got it. You got so many months. If I'm not mistaken, you got almost 18 months from the time you separate from active duty to actually convert over without a medical. But the thing with that policy is a great temporary coverage as you transition out. But that policy, the bad thing, every 5 years, it goes up. The premium goes up. So, I mean, it's not like you have a level premium. When you're able to get something young enough, your monthly payments will never go up. You know what I mean? As long as you have a level premium, you understand those keywords right there, people. Level, level, level. As your guys, hey, I got a level. I would definitely love to look at anybody's life insurance policy. We can go over it and make sure you understand what you do have. And because a lot of people have stuff out there, they don't even know what they have on that whole aspect. Okay. Now, as we go into the term policy, like I said earlier, it's only a specific amount of time, 10 to 30 year on. It's very associable. Why is it good to get a term? And when is it good to get a term? That's mostly what I would say to a person. Why is it good to get a term, and when is it good to get a term? The term policy is a good policy. It's an affordable policy. When is it good? Whenever you can get a policy. If the only thing you can afford, if you have a $40 budget, okay, let's maximize that $40 monthly budget into a term policy, get you as much life insurance we can right now. It's going to be more inexpensive. Get you a coverage right now because you need to have something in place. Later on, we'll come back in, we'll get in the system, we'll sit down, we'll make a budgeted plan, we help you on it. We also do debt consolidation, so we're able to connect you with some great organizations out there, help you lower your debt, be able to get you something affordable, and get going into a financial foundation plan for you and your family on it. So this is one thing you want to be definitely be covered. Me personally, why would I say I have one set up with myself for my daughter? So technically, something happens to me, I got a term policy that my wife knows that one's going to be activated just to pay for my daughter's college. So if something happens to me between now and then, we have a specific policy that is set for 15 years. We got that one. It's a 15-year policy that we got set up just in case something happens to me to cover for her expenses to make sure she goes into college. Last thing we want is something to happen to me, and now my wife and my daughter's life change overnight. You know what I mean? Literally overnight. They will have to move from where we're living. No more private school. We got to move somewhere else. They have to move somewhere else. It's a big change on it. So when it comes to the financial side of the house, we want to make sure we have that thing in place. Last thing we need is our families to be missing us or mourning us, whatever the word is. But when the aftermath, after the passing, after you're on the ground, after you're ready to put that last piece of the ground on the dirt on you, and they put the flour and they cry you away, the reality is going to hit them. Oh, snap. What are we doing? Do we have enough savings set up for what we want to continue? Can I continue my current lifestyle as we move forward? Same boat. Same boat for the male, same thing for the spouse. Because nowadays, there's not a one breadwinner in the family. Nowadays, it's a team effort. Nowadays the wife, in a lot of households, the wife makes more money than even the husband makes more money. So that financial has to be equally balanced anywhere you go on both sides of the houses. So this is when a term policy will come into effect to make sure you have at least that basic foundation set in place. Then from there, we're going to go ahead and grow. You bought a property. You got a 20-year mortgage. Okay, so you went ahead and got a 20-year life insurance policy to cover the mortgage of the property. You know what I'm saying? So things like that is when you want to utilize these on it, but it's mostly to get your foot inside the door when it comes to your financial foundation building plan. You want to make sure if you cannot go in strong, this is a good baby step to get you in going and making sure we have the right coverage set up for you on it. Go ahead, boss. Ranger Rod, you say you have questions on this?
So, I know you're saying you're asking when is the best time, and a lot of it has to do with people's budget. Is that correct?
Yeah. Mm-hmm.
Okay. From your experience, what's the lowest budget can someone afford? I guess if they are
the lowest budget, the lowest I've done
coverage,
coverage. I've done coverage all the way down to $10 a month. You know what I mean on it, and
wow.
then depending on the age of the person, it depends on the coverage. I mean, a person at our age, even a person in the age of 30 years old, could get $1 million policy for less than $100 a month at a 10-year term area. You know what I mean?
Oh, wow. Yeah.
You know, so a lot of stuff is that, and then it's different companies also. You know, the beauty about us, we don't represent one company. We're not tied to anybody. You know, so we go out there, find the best fit for that client that he or she might need. Of course, their medical will come into effect, their age, all that stuff. And some cases, employment, if they're pilots and stuff like that, a lot of stuff will come into consideration. But the earliest we can get them into something, the better it's going to be. And we can always convert that over to something else on that level when it comes to the term. So that will be mostly the win. At the end of the day, something has to be in place no matter what. You always want to make sure the person has something in place, because overnight there's plenty of stories that we can go over, you know, and we can see how somebody young can, you know, have a car accident, a motorcycle accident, and be either disabled or pass away, and now the family literally changed overnight. I'm only 24 years old and he was only 24. How could that be? You know what I mean? And next thing you know, boom. I mean, we hear all the time in the news, we can hear how many people pass away monthly, less than 30, on an accident or because XYZ happened or something they weren't expected, or even a medical condition that came to them, and now they're no longer going to be able to get a life insurance policy, because you got to qualify for the policy. A lot of people think it's like, oh, it's just something I'm going to go get. No, it's not. You got to qualify for these policies. You know what I mean? You got to have the health for the risk level has to be acceptable for the carrier to take it. And then it's just like, look at your life as your credit score. You know what I'm saying? How am I living my life? Am I a healthy person? Am I underweight? Am I overweight? You know what I mean? Am I doing the right thing when it comes to my health on it? So most likely you're going to get a little lower premium, more coverage. You know what I mean? But then if you're overweight, you don't take care of yourself, you do a lot of risky stuff, you got speeding tickets, you're reckless in what you're doing, all this stuff is going to be seen. Most likely you're a higher risk, so you might pay more money and you get a lower death benefit, you know what I mean, coverage on amount on it. So a lot of times and then you might find out a company and say, you know what, go to Drive Time or something, because we're not gonna you're not gonna get nothing from us over here, you know, something like that. You might go to a different company that they will insure you at a very, very high risk rate on it with a very low death benefit. So it balances that whole plan level. Is going to be like, oh, it's not going to get any better, because the older you get, the more expensive it's going to get anyway. So, you know, so the younger you are, the younger you can get a policy locked in. That'd be it. That'd be the best thing you can do.
Okay, so for a young adult, you know, the ages 18 to 25, what would you urge them to get?
As much they can afford. So anybody at the age of, so life insurance, when it comes to a term policy, all right, when it comes to a term policy, you got to be the age of 18 and above to get a term policy. Okay, we got Bronx Dad coming in. I don't know who that is, but we'll figure it out in a second on it. So you get a term policy got to be age of 18 and above. A permanent policy, a whole life policy type deal, or an IUL, Index Universal Life, you got to be 14 days old to get a policy. What I mean by that is you can get a permanent policy on your child, okay? 14 days old, you can actually put a life insurance policy on your child, and now you're locking in a very low interest, a very low premium for that child for the rest of his or her life. Okay, that is the beauty about doing it at that level. Okay, so a child policy, I am very advocate of getting a policy on your child as soon as possible, because you're helping him or her later on in their life. Not only creating a cash value, but you're locking him or her with something already in place for them at a very, very affordable. I mean, you can get $200,000 for less than $100 a month. I mean, 40, 50, 60 bucks, depends on the kids, depending on your state on it, and have that already locked in. There's other stuff involved in that one we can definitely talk about. Yeah, but that's the beauty about that part. But yeah, 18 to 24, depending on their budget, get as much as you can and go from that point on, lock that in place, and then we'll sit down and see really what they need, you know.
Okay, now I appreciate that, and I know you touched up a lot on the whole life too, but it does with the age and when they can start. So that was good information to know as well.
No, definitely. Who's Bronx Dad? Bronx Dad, you there? Bronx Dad's in quiet mode on that one. But no, yeah, no, that's mostly what it is on that end on the whole aspect. So you utilize the term as a foundation when it comes to it. And I think I got a diagram here somewhere. Let me see. Like for example, right here, if you notice this right here, the power life insurance. Right now, household is made up like this. You know, a household, you got the parents and the children, they're the financial income. That's the financial foundation you have right now. So their monthly income is providing into it and it's sustaining all your mortgage, sustaining all your health care, your taxes, your tuition, everything's being sustained by the household of the family, the parent, the dad, and the mom. For example, the day one of them is missing, things will start crumbling down. Things will come in and start crumbling down on that level. That is the when the reality hits the fan. Okay, on it. What are we gonna do? How is that? What is the family's gonna do now? What is the change? What is the contingency plan that we have in place? Are they gonna change their lifestyle? Are they? What they are? Is our family plans going to continue to move forward? All that stuff will come in. But when you have life insurance in place, when it comes to that financial support on it, that gives you that foundation. You continue doing your normal daily lives on it and maintain that how you say the word continuity. Go ahead, Rod. You're my English guy.
Continuity.
There we go. You get that. Go ahead. You maintain that.
Continuity.
There we go. You maintain that right there to keep moving forward on that one. So that is the reason why we want to have that set in place. Foundation is that. I mean, before you invest, you got to have your financial foundation. Once you have that, once you have this set in place, then you can go ahead and do your investments, do whatever you're going to do on the side, go high risk, but you got to have that financial foundation in place, set in on that one. Bronx, that you there?
Yeah, I'm here.
Oh, what's up? Change your. I didn't know you lived in the Bronx, brother.
Oh, no, that's my dog.
Oh, no, yeah. So far, brother. Any questions you might have, and you want to chime in, definitely put in, man. And let me hear your 2 cents. What you think? What you learned so far? What your experience been? All that stuff.
Oh, you talk about me?
Yeah.
Oh, mine was actually, mine is pretty good. I mean, how how you how you brought that up was, you know, well, we haven't really kind of connected in a long time since after place. And then when I ask you what you do, I pretty much is like, yeah, let me check it out. So drove to Dallas from San Antonio.
That was a long
Just
drive. Yeah, I remember that day. You came all the way to
yeah,
San Antonio after so many. Yeah, that was a
I
whole
mean, there was
monster
a whole
ride.
lot of road. Yeah, it was a long trip. But the good thing about that is like I got exposed to something that I didn't know, and I know it was, you know, I mean, it was a good thing though. But like I said, I got it for myself. I got it for my two kids once. We got that going. But overall, it's just that I think for everybody, it's like ask as much questions as you can pertaining to what it is that you want to do, because there's gonna be a lot of information and you're soaking that in, but and then you're like, okay, what about this? What about that? So, with my daughter, which is all of them, we got about girls, the best way he was explaining to me is that you're actually better starting them young. So the rate, which from what it's been a while, so from what I understood was it'll never change.
Mm-hmm.
So, but even if you start them, let's say 15, 12 years old or whatnot, the policy is still, I mean, the, the monthly is still not going to be as greater if you start them older. So the pretty much from what I got from that was it was already going to be locked in for that amount. And then when you start them young, is that they're gonna start accumulating, that return instead of like starting them late and then it's kind of playing catch up from what I got from that.
Yeah, in a way, yeah, I understand what you're saying on that one. The Give me a second here, real quick. From the yes, I'm sorry, your premium level will never go up. So technically, if on your daughters, for example, they will not go up. They will stay like that for the rest of their life. As long as the policy stays active, it doesn't lapse, and they keep paying the way it got structured, for example, is going to continue the coverage as it's going. And I think on your end, we're not going to go into detail how we did on your side of the house, but there's things you structure the policy to benefit the 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 insured person in a way that it later on in the life it allows them to utilize that more for their advantages on that one. But yeah, the younger the better. Like you said, it gives them that locked in percentage. I mean, correction, that locked in premium. That way they can keep that for the rest of the life and make sure as long as that level stays, the policy stays up to date, there should be no, they're not going to have any issue. And it's structured the right way, it's going to outlive them. That's the main key. You always want to look in a policy where somebody shows you a policy, like, hey, when is this policy going to lapse? As you have it illustrated on it. And that's what you want. You want to make sure that thing gets up to 121 years. You want that coverage to be out there. That's how you know you got a good policy structure when it comes to foundation on it. Because you maximizing my budget, I mean, am I getting as much money as I need on that one? You did the analysis on that person to be able to look into it. That's the beauty on the stuff that you want to look into to ensure you have all those policies in place to max it on your end. But no, yeah, that's great. Anything else you got, brother?
Oh no, that's about it for now. I mean, it just depends on like the topic that we're gonna cover, and then I can, kind of input more of what we're
We're
gonna
here.
be,
Yeah, talking all covers. We're gonna try to do this. I know this is a little bit, our shot group is not center mass right now. We're a little bit on. We're all over the paper a little bit right now, but we're on the paper. You know what I'm saying?
Okay.
All it is right now, this is us coming in together little by little, bringing our conversations that we do more in a public platform, so that way, when people get to hear it, they get to comment. Hopefully, we can lay that seed of foundation into them, allow them to continue to ask questions, because there's a lot of people out there that are selling policies out there, but you want to make sure that you understand what you're getting yourself on. You want to make sure you get the maximize. You want to maximize your money when it comes to life insurance. You know what I'm saying? Plus, at the same boat, you don't want to have more coverage than what you need. Neither. You know what I mean? So you got to do an assessment on, like, do I really need $1 million worth of life insurance, or 500,000 be really all I need? You know what I mean? I know earlier I was telling Ranger Rod, I'm like, hey, you want to maximize as much as you can. Me personally, as me, I want to, as a young kid, I would have, like my daughter, when she comes 18 and she's going to be the owner of policy, she's going to be, I want to tell her, maximize whatever you can afford, because you're already young enough and you're going to be paying low, and you don't got to worry about the rest later on. Now you just got to structure these policy in a way that is to your advantage on it. So, but like I said, every person is different. Everybody has different goals, different structuring, different finances goals, and different income engagement. So all that stuff comes into place when it comes to that.
Yeah, I think for us as the group, since ever since I started this, the biggest thing for me that I think a takeaway is that, yeah, ensure that you do your research and then look at your financial situation, and make sure that when you start it, it's something that is never going to change, and then make sure that policy is what is, like, tailored for you.
Exactly.
And yeah, because I mean, like he's saying, it's like you don't want to put in too much for something that you don't need. You want to put the right amount for what you need, for what you needed coverage for. And then not only that, the ones that I wanted was the one that accumulates, throughout time. because I do gonna wanna, you know, let's say emergency, I wanna use something to fix up my house. If I accumulated that equity, I can borrow from it, you know, which is what I want anyway. So that's tailored for me because this one is specifically that I asked for. Which one is gonna be, you know, the one I can get money off of, like borrow from myself. Because I've had USAA life insurance for over a year, and when he told me what kind of policy that I got, so that's not. I mean, the USAA rep just told me, "Hey, this is what's good for you," but I never asked question. So I thought it was actually something that I can borrow against from myself, which that wasn't the case. So find that policy, find that the one that builds equity that is gonna be for you. So while you're still in the beginning phase of it, you know, you're actually, you know, maybe the first year you're not, but the second year you're accumulating that. Because I mean it's gonna take, you know, maybe 3 years, 4 years down the road until you like decided to like, you know what, I'm gonna do a renovation of my house. Let me see if I can, you know, get something against mine without, you know, affecting it. And but you still, you know, putting into it.
Exactly on that one. So that was a great example that you just said about a lot of that we were talking about that earlier. Is when people do get a policy, they don't even know what they get. You know what I mean? They just go for what they tell them. Okay, this is good. This is what you can get. Call it a day. You know, there's some companies out there. You submit your information online and you get a policy on the spot, but you don't know what you're getting. You know, you're just paying for something on the whole level. So you want to make sure that you have a lot of coverage. What I say to everybody that's listening, everybody, if you got a life insurance policy, I want you to go ahead right now and remember this word, living benefit. I want you guys to go check with your policy, call your insurance company, make sure that your policy has living benefits. If your policy does not have living benefits, definitely give us a call, contact us, send us definitely subscribe on the channel. I definitely want everybody to subscribe. If you're here, please subscribe so we can pass this on and be able to be easy access for people to find us. But living benefits on a life insurance policy is a great uh, tool that they have on. It's an add-on, it's a rider. On a lot of these companies, some of them will charge you for that, but most of these are already included in a lot of policies. Okay, just they will not put them on because people don't ask for them. You know what I mean? If you're not going to ask for it, they're not going to put it in. Okay, so living benefit means you can utilize benefits of the insurance policy while you're still alive, whether it could be a chronic, critical, terminal, or even Alzheimer's disease. There's a company out there. If you are diagnosed with Alzheimer's, they'll pay you while you're alive to be able to take care of your treatments, take care of your bills and stuff like that. For example, you might have somebody that had a stroke, a heart attack on it. They can actually contact the life insurance policy. The policy is going to be able to send you a monthly give you a lump sum, monthly payments, whatever it is, as long as you qualify for those specific benefits, depending on the carrier, the company that you with, that you have your policy with. They have certain things you got to make sure you qualify. The policy is going to pay out while you're alive. Okay, that is a great game changer. That is a great thing when somebody gets hurt. They're over 90 days out of their job because of disability. Boom, they can activate their policy and get some money coming in because the financial hardship has not changed for the family because the life insurance is there to cover that while you're still alive, while you're going through that medical treatment, while you're going through those specific events, life-changing events when it comes to it. So that is something that's very, very, very critical on it to make sure you do have in your policies. You know what I mean? You guys got me?
Yes, sir.
Perfect. Mr. Mason there, how you doing, brother?
All right, man. How you guys doing?
Doing well. No, just going over. I got Mr. Bronx dad, that's Mr. Belandra down from Texas, Ranger Rod. I think you already met him from Florida.
Yes.
Mr. Dima from Chicago, and myself, and the other one is just my little tablet I got on just for backup.
Good evening, gentlemen.
On it. No, real quick, brother. Anything you want to add on? Any questions you might have? Chime into
Well,
it.
I had sent a little message regarding what Ranger Rod said earlier, and it's just basically piggybacking off of what he said about budget, but a lot of it has to do too with everybody, like you've been saying, everybody's situation is different, but at some point, you know, it's always good to jump in. Sometimes you may feel even lost, like you don't know what you're doing, but you know you're doing something beneficial for you, your family, your future, you know. The point is to, you know, is to get people engaged, and hopefully, you know, people realize that what you're telling them is for their benefit, and you know, for their future, and even for the person's benefit, in case they're not looking. The thing about not investments, but you know, like in my situation, you know firsthand that an annuity is what's going to be helping me in my retirement, you know, to liquidate money coming in after when I retired. I created my own retirement.
Exactly.
Um,
Yeah. Mhm.
So, you know, those are things that, you know, if you're lucky enough to do that, you know, you got to jump on that, you know, and seeing after 1 year, seeing what the benefit was to the account was something that I had been hoping for. Because a little background is that I had a home inspection business, and I hung them up at the beginning of 2024, and you know, it was just time, I think, you know, so try something new, get into something new, and I didn't know this until at this time of the year that I needed to do that. Sometimes there's little chain reaction that happens. Um, in my situation, I got injured, had surgery on my left knee. So you start thinking like, oh my God, what about if I didn't have this job? What would I be doing? But luckily, I think I had already made the move to do the annuity. And, but it still makes you think like, okay, what about if I don't have this job? You know, what else can I do? And like piggybacking off of what you said, which was about education, you know, and my father used to always say, you know, that, you know, they could take the clothes off your back, they can take your car, they could take, you know, your house, but what you have, what you learn, and what you earn a degree or a certificate in, they can't take that away from you. You know, nobody can take that away from you. So, and my dad's already been passed since 2017. And, you know, but those words, you know, sometimes our parents' words kind of linger in the back of our mind. We even sometimes talk like our parents, right? You catch yourself in a deja vu. And it's the point of just trying to do the right thing. And hopefully things are gonna, you know, pan out, you know. So being, you know, having like, you know, somebody like yourself that was able to guide me, and, you know, I'm going to help hopefully guide others once I get my license, you know, in the very, very near future. Uh, so, and I hope, you know, hopefully Ranger Rod's going to be there, and this gentleman that just joined us this evening, I don't know what his situation is, but, you know, I'm older than Francisco, Ranger Rod, and maybe even the other gentleman. It just, you start thinking differently, you know. You start thinking that you wish you would have done things earlier, and you guys are at a different point where you guys are going to take advantage of it even at a earlier age. Um, but yeah, I would say I probably got in the game of doing any kind of investment, whether if it was an annuity, or I had first gotten into the self-employed IRA, which is, you know, how I made the initial bulk of my finances for retirement. And I wanted to be conservative about it. And that's the route that I took, getting an annuity where it fit what I wanted to do once I retired. The thing is, you just got to be patient, and God willing, you're going to see the fruits of what you planned, and not have to depend on anybody. That's the way I look at it. I'm not depending on anybody. I've always depended on myself to get me to where I want to go for me and my family. So I'll stop talking.
No, that's great. No, that's great. There's a lot of great points right there, and it's a great example, like you were saying. A lot of people don't understand that another product, another tools that we have is annuities. It is a life insurance product. As annuity is something that is your investments that you put in, the money, not investment, but the money that you deposit into it is not going to get lost. That is it. And at the end of the day, whatever money goes into annuity, it's only going to go up. It's not going to go down. It has what is called a floor, which means when the market is not doing good, your money don't go out and play. It has also a ceiling, which means that when the market is doing very, very good, you're only going to get a limit of the earnings of that on it. So you're going to get a credit. Your credit earnings are going to be up to a certain level of percentage, but that's okay because you're paying for that security in the market. Like, let's go think about back in COVID. I mean, a lot of us here know a lot of people working with 401ks that were retiring. All of a sudden, boom, COVID hit. 401k took a 50% dive plus. People had to stay in. People had to continue stay in the workforce. People in the late 60s working out here, trying to make out just to get more money, just get enough money to get them into a position where they were at back in 2020. We are in 5 years later, working 4 years, going on 5 years, trying to be where we were at back before COVID. You know what I mean? That's a reality check right there on a lot of people. You know what I'm saying? Life changes event right there. I'm retiring at 2021. All of a sudden, no, you're not. Guess what? You're working more years. You know what I mean?
Wow.
Yes. And then look at the Social Security. What you're getting. You work 40 years to get Social Security. And when you think, okay, you put so much money into Social Security, but you're only going to get not even $1,500 a month. Come on now. You know what I'm saying?
So for those of us that understand Spanish, those life changes, I call them like a golpe, a hit,
Yeah.
and you're like in a like when you were a kid, you went to the carnival and you were playing in the what do you call it, in the smashing your cars or whatever. It hits you one way, you go the other direction.
Bumper cars.
Bumper cars. There you go. Thank you, sir. and what led me into the having my own business was a golpe. What led me into going to where Francisco and I moonlight, is a golpe. Business, whether if it's business or a life, their life changes, and sometimes you don't even sometimes see it, but sometimes somebody kind of shines a light on a situation. Which are you going to show me a picture or something?
No, you're good. I'm just putting.
Oh, gotcha.
No, you're good.
So all of us can probably relate to that hit or a change of life, like you guys being even in the military. Something happened where it got you into the military. Okay, now you're done with that, and it's time to do something else. You got to evolve, or sometimes just change is good. Sometimes it sucks. Sometimes you have to get through it, and then you're like, oh wow, I never thought in my wildest dreams, without a college education, that I would have what I have. That I know I'm going to be okay once I retire. You know what I'm saying? So
yeah.
And the reason for this, what we're doing here, is I like to help people. And that's how I, translated what I did in my home inspection business, was to thinking that people are going blind. They don't know anything about a house. They don't know how things function. They don't know how old things are. And I felt like when I was done with that report and I basically held my client by the hand and showed them, okay, this is what the condition is on every aspect of your house, from the top of the peak of the roof to the bottom of the foundation, to where your mechanical water heater, furnace, all those things are, because what was important to me is not important to any one of you gentlemen. It could be different for all of us, but the what's under that roof is when you look at it, as you say, Francisco, at the end of the day, right? In the end, everything's important to you. You want to make sure that you're checking every box, and I feel hopefully I can get people to see that vision, and it's going to help people. I hope people see that.
No, you're right on the money. And the thing is, the base thing we want to make sure, what is our main focus? Pass the information out. Because I mean, even though as we talk about this, some people are listening and they'll be like, okay, makes sense. All I thought was life insurance. All I need is XYZ. And that's it. They tell them, hey, you can get $1 million for it. Right now, a lot of people look at that. You turn your TV, $1 million for $10 a month. And then when you call, they're going to give you $200,000 for $300 a month. You know what I mean? And then because there's factors involved in it, people don't understand that their life within their state is being followed. So whatever the state knows about you is what's going to be reported to the insurance company for them to make the determination what type of a risk factor are you. But there's a coverage for mostly everybody out there, some type of coverage. Or we can come up with a structure for it. Or like you said too, there's other tools out there that we can utilize to make that come open, to have that financial foundation set in place, like an annuity. An annuity could be started. Annuity used to be something that if you have $25,000 up front, you couldn't start. It's not like that anymore. We got products now. You can start at $100 a month, for an annuity, at least to get you into the game, get you at least established on it. You know what I mean? For definitely, is a lot of different things out there that a lot of people are living the normal life. You can talk to many times, and some of you guys been on calls with me that will be like, okay, at what age you plan to retire? People are like, well, I don't know. Okay, how much money do you want to get paid every month from your retirement? Well, I never thought about that. Okay, how much is your monthly expensive when you do retire? Do you know that? They're like, never thought about that. Or they're like, well, that's too far away. Well, don't you think you might want to plan for that right now? Well, you have all these years of working abilities that you have to get that money on it. Let's see how much money you want to have. And then some people come up with they'll start laughing about it, like, oh, $20,000 a month. Okay, let's make a plan to make $20,000 a month. And when you sit down, for some of them, it's probably something feasible for them. They're like, you telling me you only got to do X, Y, Z? If I maintain this discipline, I'm going to be able to reach that amount. I heard something.
Hey, Francisco, well, it feels weird calling you by your first name. I've always known you. I've always known you as Mendez.
Go ahead, man.
That's the whole thing about military. Like you said earlier. Okay, let's use me as an example, because I think it's better if we put an example to that person, so everybody else that's listening. Okay, how much is mine? That just for me, how much am I paying off for my annuity, or the ones that the UNB game plan as far as what I want to do? How much?
How much you paying on your insurance? You mean?
Yeah.
What is your monthly payments on yours?
Yeah, I don't even know. I forgot. All I know is I paid.
You're the one that pays it, brother. And that one. Well, so let's say I don't know out of the top of my head exactly your account, where we at on it, but let's do an example. Let's say right now you don't have nothing. Let's go with that note. That way we don't put too much of your stuff out there. So let's say you coming in, you're like, hey, I don't have nothing. I'm going on. I'm gonna go ahead and sit down with you. Be like, okay, let's find out how old are. So right now, give me it has to be your specific age, but give me, how old are you?
46.
46, right? 46 years. Are you married or single?
Yeah.
It's a hypothetical. Just give me not exactly you.
Uh-oh.
But yeah, but yeah, put single.
Okay, no
You
problem.
were losing everything there. Your voice,
Yeah.
mic, connection. Just
Yeah, everything's going away on him. Mic connection, everything.
The system got
that was a
nervous.
oh yeah, it's a sensitive question.
Yeah, it's back online. Yeah, I don't see your guys' face. You guys are there. I don't see you guys. You guys went away on me or no?
No, I'm here.
Okay, I don't see. I only see the names. I don't see faces. Cool.
Well, because I have the video off, so
Oh, okay. That's probably.
we figure you're the star of the show.
No, all of us are. We're all together. One team, one fight. Yeah. Hey, go ahead. With B Belandra Jeff. So 46 single. So I would tell you, okay, right now, at what age do you want to retire? I think we lost him. I think he's already on.
It's showing he's still there, but
I see him there. I don't see him. The green box on him. He's probably moving around. In one area, Russ. FBCB two up or no?
have him log off and then log back in.
Mm-hmm.
Okay, I'm back. It's my signal because currently right now I'm actually so after the military, just to let you just to give a little background of myself.
Remember, brother, we're live on YouTube, okay? Just letting you know.
Okay, well, just a little bit background of myself. Now I'm trying out a different profession, so I'm actually in a car business. I'm a sales rep. So, like right now, I'm here because I want to join in and I just want to get to know everybody else. Like earlier, I know I forgot to mention that they're trying to jump into this thing, and I'm doing the same thing down the road, get my license, and start doing the same level, educating everybody as far as like what is out there. Get the right person, the honest person that's gonna give you what is gonna be good for you as a whole versus just giving you the words of here and there when it comes to like policy, like hey, by the way, is there what is it comes with this policy entails? Just get what you need, the proper policy that is going to be beneficial for you and as a whole.
There you go. There you go. And then he said it right on the point. Mostly get what you need and get that foundation established. In other words, on it. And there's things we find out. So you will always look out, okay, their age, when they want to retire, how many children do they have? So we put all that into this little equation and find out how much life insurance really they're going to be needing right now, at least to get the basics going, to make sure if something does happen, and God forbid tonight, that coverage is set. You know what I mean? And then from there, we always one thing you want to understand: if you have when you work with your clients, they're your family. You gotta go back to them every year, twice a year, once a year. You got annual reviews. You want to review those records with them. Make sure any changes they might have. Make sure they're up to date. Make sure we have everything they need. Any changes they might have. Go over the policies. Anything that the policy might be a benefit for them or then their future vendors and all that stuff. So all that stuff will come into effect when it comes to it.
Okay, now let's go back to what we were trying to do before everything got disconnected. So I'm single, 46 years old.
Mm-hmm. Single, 46 years old. So I would say, what age do you want to retire?
Well, let's say 60, 65. Let's go with 65, the average.
65. So you want to retire at the age of 65, right? Try and get my calculator out here real quick. Give me a second. Okay. Okay. So 65, you're 46, right?
Yeah.
Okay, so that tells me you got 19 years left before your retirement. Okay, that's 19 years left for retirement. Now, my question to you would be is, how much money do you want to get paid while you retire?
I wanna say, for me, comfortably, depending on my financial situation, that means I don't have enough. I don't have or am planning to accumulate more bills. So to me, comfortably, the way economy, the way it is, but I would say 35 to 4 a month.
Well, 4K a month.
Yeah, about 4K, 3,500 to 4K a month.
Okay. So honest, so you want to get a 4K a month. So we're looking $4,000, right? We're gonna
Yeah.
multiply that times 12. So you're looking at about $48,000. So you need 19 years. Life expect you got $48,000. Life expectancy technically right now usually about 83 years old. So you're looking at 65 years old, right? So let's say your life expectancy 83. So you need to cover that retirement for 18 years. So for 18 years of your life after you retire, so 83 is roughly the norm right now of life expectancy for a male on it. So we're just going to use those numbers as references. So times how many money you need per year is 48,000. That means you need a total of 48,000 times 18 years, about $864,000 to fund your retirement. That's how much money you need to have saved up. So my next question for you be how much money you have saved up right now? Close to that 864. You close enough to the 864?
No,
Okay. So how close do you think you are on it? So right now, what could be a foundation you said that you currently have?
I would say a quarter of that.
Okay. So we go for a quarter of that minus 25%. So we need up to about $648,000 to fund it. To fund that Pacific retirement income. That is what we already have in place already as a number for your retirement, 648. That's what's needed on the whole aspect. From now to then, we're gonna come up with different foundations on it. So automatically, I'm gonna be able to say to you, we need to get you at least a life insurance policy for 648,000. But there's one thing we're not putting into consideration in this equation, which is inflation. Okay, on it. So inflation roughly goes between anywhere to 2 to 4% a year times all those years on it. So how much is my dollars going to be worth 19 years from today? So let's round it up to 20 years, So 20 years from today, if something costs me, whatever cost me $1, how much is going to cost me 20 years from today? Most of us here, we're about the same age group. Well, mostly we got a young one over here, Mr. Felix. You're the young guy.
Oh yeah.
What I'm saying, everybody here, I guarantee you remember 83 cents tacos at a fast food Mexican restaurant that is very famous, right? Everybody remember dollar menus, right? They used to be under $1, right? Now they don't cost.
I remember gas was 89 cents.
Exactly. So all these things that used to be so cheap to purchase back in the day. And I mean, when you have to change the dollar menu to the value menu, we got some issues. No longer it's $1, it's a value on it. So that's because of the inflation. This past 4 years, we already know what this inflation has been. It's ridiculous on it. We're feeling it on the whole aspect. So with that being said, that's another question that we can do off. I'm going to go through the whole process online because it's a specific thing we're going to be doing to get those numbers to get you closer. But we're just going to go with the numbers you gave me. But that's one thing always to keep consideration is to have that is going to add up, is going to raise it. But with what you have given me right now, let's just go with the 648. So right now, identify, I need to give you at least $648,000 minimal of life insurance on it. That it needs to cover you for at least 19 years on it. Because if something happens between you here and the time that you're going to retire, that money's there for your family to continue on. Because there's a plan in place financially already in your household to make sure the money keeps going forward. Because remember, life insurance is not substituting you, it's substituting the income that you're bringing in. You know what I'm trying to say? So that specific event, that's how that would go. With that being said, what is your monthly income coming into the house?
Let's say about 7,000.
Okay. And right now we got 7,000. So this is another math that we got to do. 7,000 times 12 months. That's 84,000 times 19 years you got left to retirement. So 84,000 times 19 years to retirement. That means you need 1.5, almost $1.6 million to cover your income to retirement. So $1.6 million is what you need to have a coverage on income only to cover. Because right now, do you owe on your house?
Yes.
Okay, how much you owe on your house?
Well, it's so it's a what? It's 30 years. I still owe like roughly around 255.
Okay, so about 255. So you want to add that up on it. And you any kids that in college under 18?
I got two under 18,
Okay, how old are they?
15 and 12.
Okay, so 15 and 12. So we're looking about so they're right there now. Another 20. Yeah, so that's 300K on that one. So now let me add all your numbers out together. $1.6 million, right?
Yeah.
Plus the house is 255. Plus 2 kids to cover college. Okay, so total, you need $2.1 million worth of life insurance to cover everything that you need from here to retirement. Now, not all of this has to be a whole permanent. There's certain things you want to have $150,000 coverage per kid for the education. You know, something happens to you today. So that's what it is. So your numbers right now are at 2.155. Replacing your income that you got in your household. That income has to be replaced for, you know what I mean? Because you don't want the family to, when
Yeah.
something happens, that 7,000 is not coming no more into the household. You know what I mean? And this is just us throwing numbers right now. And of course, and I'm doing this in a different way that I really would do it for my own specific reason. But what I'm saying is overall, with that $2.1 million, what we have to work and how we're going to secure that insurance for you. That's your foundation. That is this part right here that we got to get. So that 2.1 will literally will maintain the same lifestyle you have right now if the discipline is set in place and the plan is set in place, and that policy, and they're utilizing that money to that retirement time frame on it. The 648,000, that's how much money we need to come up for your retirement on it. This is when we came out with the 648,000, that's something with strategy we would have to do to look out, okay, how are we going to be able to get you $648,000 to make sure you're financed your own retirement. That's when we're going to sit down and look at your social security, how much you're going to get paid, if you got any military retirement, all that stuff. We're going to be looking at those numbers, and then we identify where's the gap. Once we identify where's that gap is at, then we can come up with a different strategies to be able to at least have a foundational way for you to have that money coming in. Does it make sense so far what I'm saying?
Yeah.
Okay. Anybody else want to chime in? Anything that you guys see on that one and you think should be done different?
And in my opinion, I mean, he's way more from on the surface. It sounds like he's more financially, like if I had that kind of money, the quarter that he was talking about, or roughly there, that if he could part ways, it's hard to part ways when it's liquid or it's in the bank, when it's not really doing anything for you. Whereas he could probably take some of that and do like something futuristically like what I did, because I started my business right around about 20 years ago. So it took me 20 years to establish that. And then I was able to make a move. Whereas he already has it, but he's also looking out at different things. His financial numbers, as far as debt, is a little higher. You could still, like to use your words, to a strategy where you could use both, something for retirement and something for life insurance and get, to pay things off in case something were to happen. His family's covered. So,
Mhm.
the lowest, as they say, what I've been learning in this, in the book and for the license is that, term insurance is the lowest type of, the lowest premium that you can get into. And you can always move into something else in the future. Am I right?
Yep. Mm-hmm.
So, and maybe by him, depending on how he sees himself, where he's at, his employment, only he knows exactly, because that business is kind of like, it's volatile, it goes up, it goes down. It's like my business. That's kind of like what, again, the golpe, what changes, the hit or the life change that makes you think like, man, real estate is peaks and valleys. And this time around, it was because of the, people, a house was, let's say that was 100,000 when I bought it. Now the house is worth 400,000. And, the 100,000 era had maybe 7 point something percent. But then over time, before the pandemic, the rates were going down because they want people to buy real estate. There was a correction in all reality back in 2010, the last time there was a real big correction with people not no income verification. Could you imagine that?
Oh, that would have been lovely.
Working at McDonald's or Wendy's, and you could buy a house for $500,000. I mean, those days are gone. But that's what was happening before, and that corrected that. And so the point of what I'm trying to say is that, he's in a better situation at this point at 46 than I was. I was starting my business when I was, in my 40s. So, I think, if he's on the track to, the other thing that I was discussing with Francisco is that once I get my license, God willing, that I'll be able to maybe even establish my own insurance on myself, and you're able to have some of your what you would be getting paid to do this job to help benefit me. It can help try to pay some of it by itself. Am I on the right track there, Francisco?
Yeah, you're saying mostly using whatever your earnings are to pay your policies with your earnings. That's what you're saying.
Correct. So that's one benefit that we can help ourselves as we help others as well. But it's, it sounds like if you can let go of some of that cash, and I say that, tongue in cheek, right? It's like, when you got that money, it's like, man, it's hard to let it go. You're not going to see it again for, in your case, 20 years, but 20 years worth of a plan versus my plan. I just started mine. It was a 10-year plan, because I'm a lot closer to retirement than you are. I forgot his name. I'm sorry.
Jeffrey.
Jeffrey. Okay, Bronx dad. Yeah. So, he's you're definitely ahead of the game if but you have to. And the other thing that kind of changes that we haven't, that nobody's chimed in on is the other thing that would affect real estate is the political environment, in our country. Things happen with that too, things that happen around the world change that part of the spectrum of things, So the one thing that you can always control is what you have right in your hands. I mean, that's the reality, and that's the beauty of whether if it's your personal, or whether if it's you helping somebody else realizing that. Because that's the only way. Like we talked before, the other Zoom meeting with Ranger Rod, you know, about talking about generational wealth and, you know, having things keep on going for the better for our families, you know, generation after generation. That's another thing that you're going to establish, even if you start a little sooner, if you haven't already, you know. So I would definitely recommend, you know, it took me a while to, in all honesty, guys, to get to that point where I was able to do the annuity, because it took the company I was with, I was with Northwestern Mutual, and when they didn't want to let go of the money, you know, to roll it over. it took how many months?
It took almost 2 months, I think. Yeah, if I remember correctly.
So,
We started.
but you have to persevere, and you know, this is your money. You work for it, and you do what you want with it. You know, so I would recommend, if you got that money saved up somewhere, man, you got to definitely, you got to do something like tomorrow. I mean, you never know what can happen. You know, I mean, so.
No, definitely no, and that's a great. And you brought a great point, because as the closer you are to retirement, the more worried you get about that money, and knowing that you have that money placed in a place, no matter what happened into the market, no matter who's president, no matter what's out there, that at least the money that you put into it is gonna be there.
Yeah.
You know what I mean? You don't got to worry about that. That money's gonna be there. You know what I mean?
No, the other
Whatever.
thing that I saw with the benefit with that is that the money that I did have, I thought that if I lived my life expectancy, right? Because all of this is
Yeah.
based on your life expectancy. I thought I was going to outlive the money I had. Like, man, I'm going to run out of money.
Mm-hmm.
Whereas with the annuity, I'm able to, as long as I'm alive, I'm going to get paid every year.
Exactly.
You know, if I live to 100, then I'm going to be paid up to 100, and then my family is going to have that benefit, because this one has a life insurance
Lifetime income rider.
lifetime income for the beneficiaries. Yep.
Yeah. So for the people who listen, lifetime income rider is a rider that some IULs and some permanent life insurance policy, depending on the carrier, and some annuities, depending on the carrier, offer on it. Which means it doesn't matter if you dilute your annuity, the annuity is going to continue paying you an annual income until you pass away on it. So it's a great benefit to have on it. The earlier you start it, the better. The more money you put into it, and the later you start the withdrawals, then the more money you're going to receive also on it. So it's a little formula and mixture on it. The earlier we can get this thing going and started and building it, then you're going to be looking at some comfortable income later on to be able, because like I said, that the good thing about the annuity is once you credit it, once your balance is there and you're credited, your money's there. You know what I mean? That's it on it. It's going to be waiting there for you. So that's the beauty about those type of policies and those type of products out there and contracts that insurance has on it. Like I said, it's not an investment tool. It's nothing to go out there and try to make hundreds on. If you want to invest, there's other stuff out there for investment. We're not investors. We don't deal. Definitely look at your financial advisor for that part. But definitely on our side of the house, we're into securing and setting a foundation for your financial household. And then whenever you go play out there in the big games, go play with options, with stocks or EFTs or crypto, whatever you want, you can go do that. But at least you know your foundation is set on that one. No, that's great. That's great. Any question, Jeff? Do you guys so far? What you think on it? So does the numbers look something doable? And he's fine. Well, on that, hey Junior, you hear me?
Oh, they left us.
Nah, Acosta's there. I see him. Everybody's got their cameras off. I don't know why. We got to get a rule next time cameras on.
I'm here. Can you hear me?
I hear you now. You good? Where you at? I don't see you.
Yeah. I was trying to put the camera on, but for some reason I'm too handsome for the camera. It's not coming on.
I'm just saying, this is your time to be able to
Where it
see
says
it.
video and audio,
Yeah,
that's
I was trying like I'm literally like going over here, going to video, and I guess like I'm too handsome for the video. It's not coming on. I'm like pressing the camera right now. It's not
there you go.
showing.
That's
Is that Junior?
Yeah,
Yeah,
that's
that's
Junior
me.
right there.
Yeah, that's me. Yeah. Hey,
Hey, you know, the great thing about like what I like about like with everybody is here is like we gotta you know the young ones and on this chat right now is it might sound like it's a bunch of older men just talking away, but the best thing I can say is that like if you want something, this is from me. If you want something, just you know just evaluate yourself, evaluate where you want to be, evaluate what kind of policy, what you want from the policy. And for me is that I have two young ones that I know that growing up, um, coming from a country that doesn't believe in credit, doesn't, you make the money, you spend it, but you spend it like, for the family. Mm-hmm. And then coming in here in the state for me was a learning curve as far as learning English. I barely started learning about, credit, which is kind of late in the game, but I don't think it's too late. We shouldn't stop learning.
never too late.
yeah.
Yeah, and then not only that, it's that my battle Mendez and Junior and all of us. It's like what I told them is like I want to do something besides what I've done before, what we did before, which is serve. I want to serve again, but in a different way, like as a profession, like not even a profession. It's just this whole being a car salesman. Like I said, it's like the economy. It like realty, it goes up and down. It goes up and down, like the way the stock market is. You can't predict it, but all you can do is prepare yourself and put yourself in that position of that if does something like say if something bumps you out of direction, you have that net, knowing the fact that you are and your family are gonna be okay.
Mm-hmm.
I think if I could add to what you're saying is that I didn't want to just get into this. I'm walking the walk and I'm talking the talk.
Yeah.
Because I have my money into an annuity and I have life insurance.
Right.
So, if all you can do is explain people from not to get too mushy, but from the bottom of your heart, and you're just being honest with people.
Yeah.
You have nothing to lose. People can see through when you're BSing them.
Yeah.
Regardless of what line of work you're in, and and in this case, I think in a lot of cases, some things in this kind of line of work, I've always had a what's the word I'm looking for? A biased opinion of this in this line of work. A lot of people, I think, have a bias because you're talking about their money. How can you tell me to do what to do with my money? But if you kind of like just show them, and a lot of the texts in the for the test to become an insurance producer is that a lot of it says when they're about to make that final decision and bring the policy to them to explain it to them, they have that buyer's guide that they can compare things, but you're showing them that you're explaining everything to them A through Z, and you're leaving everything you're an open book. Like you can go home and put your head on your pillow and you know that you're helping people. That's the
Yeah.
way I'm looking at it, you know, and
Oh
Yeah.
yeah, definitely.
only you know how you're set up right now. You
Yeah,
know,
of course.
only
Yeah.
you know, only you know the reality of how you're set up. And I think without me divulging everything, I think when you come off like that, I think people will, you know, you're speaking, as a matter of fact, in front of people all the time. You got to sell yourself. Well, this is
Yep.
it's a little bit different. You don't have to go, you know, necessarily for that test drive, but the test drive is going to be at that table, you know, explaining stuff, kicking the
Yeah, of
tires,
course.
whatever, you know, whatever you want to use. I don't know. I just see it as like I've even talked to Francisco about this. Like I'm not doing it necessarily for the money. I'm doing it because I want to help people.
Yes,
You know what I'm saying?
that's the right mindset. Because that's exactly
Yeah.
what the company is
So
intended to do.
I feel like more of a relief will be taken off of my shoulders. Like you don't have this pressure
Yes.
to, like, you can, you know, word of mouth. Oh man, that's still the biggest advertisement that there is.
Oh,
Word of mouth is
Yeah.
the biggest one, and it can ruin you at the same time.
Yeah,
So
definitely. Like for myself, like with Mendes and Junior, like for me, it's not about like you said, it's not. To me, I'd rather give a person the honest, full, transparent, honest, the truth, versus like you said, I can lay in my pillow at night and knowing
thank
the
you.
fact that I
Have
did.
a great night. You too.
Yeah, have a great night.
Oh, yeah. I was like blocking this other gentleman driveway, so he's like, hey, like it's like throwing hand signals. And I'm like, oh, I think he intended me to move my vehicle. So that's what I did. So he was just basically saying like, thank you and have a great night. Yes. Well, in the topic over here, my personal opinion is I'm already talking over here. I think Francisco Mendez, he been a great individual, helped me out to make great decisions, especially economical decisions for me. That it was a great change point in my life. The reason being that at the time that I met him, he gave me tips of how to actually economically prepare myself to a better level by investing in real estate, and it was amazing. And then with the insurance company thing too, I like it too. For the reason being that I'm gonna be using it on the future because I believe that the insurance company, a lot of the rich people like the Rockefellers and all these guys, they always remain wealthy for the reason being that they utilize the insurance that they have to actually pass that to generations and generations. And that's exactly what I'm gonna do too. When I actually find like the proper woman who's gonna have my kids, that I know that I can trust her, and then I can build a trust so that way I give the instruction for my kids, so that way we can keep the wealth in the family. And I think like the information that he gave is very valuable. For the reason being that a lot of information that he actually gave is not given in regular schools, none of that. And it's actually the same techniques that the rich millionaire people they utilize to become richer and richer, you know. And for me being in the company, it's actually like I'm a congruent with what Felix said. That is something that is more to like educate people and at the same time like from the bottom of your heart like help them out, not take advantage of them. Because at the end of the day, like basically what we want to do is like the insignias helping people is to help people out to open their eyes to get educated so they can actually base the decision that it be the smart one to actually utilize the insurance product that we actually have to secure their future. But like you know about now, but you never know about like later on. You can have like an accident, God forbid, or a tornado go through, or some deer just like find your window or some crazy shit, and then you need money to actually take care of business, and you actually can be your own bank to take a loan from your own money because it's your own money, and then go ahead and uh buy or take care of the emergency that you gotta do, and you keep your money growing that is your money. Because like the majority of the time now, like when you put money in the bank, your money basically losing value. If you have like $10,000 now, you check it like in 5 years, you're gonna have $10,000 in the bank. They're gonna give you 25 cents. Not even that, probably like 13 cents if you luck, you know. And if you actually like become your own bank, if you put your money in one of the products that they actually have, your money gonna keep growing. So if you go like 5, 6 years from now, you're gonna have like 10,000. You probably have like 12 to 13,000 because your money gonna be increasing with the inflation that is going on at this time. And I think us men we have to be knowledgeable economically because we have to have the knowledge to actually strategize for the next coming years for your family since we are the head household of the family, you know, because that's gonna be very beneficial in the long run for all of us, speaking. Because like the economy, the government, they ain't gonna stop printing money, and they ain't gonna change the system for nobody. 'Cause we already know like the system with the inflation, everything keeps going up. I think also, man, we have to be fully prepared economically to whatever the change is gonna bring. And you already know what the forecast is gonna be. Cause like anything, the houses ain't gonna get cheaper, the land ain't gonna get cheaper, the cars ain't gonna get cheaper, the gas ain't gonna get cheaper, neither the food. So we have to be like better
Gotta
prepared
be smart.
for the future. Yes, coming on, because like the more prepared that you actually are for the future, the better your family gonna be able to ride the wave. Because the one that they not fully prepared to the changes that they come, and you're gonna get wiped out. You're gonna be either like unemployed or God forbid, like you run out of money and you don't have what you have to have in order to feed your family or to take care of your family. And I think what the information of Francisco he said about the products and actually the input that he had tell me to actually prepare myself to be economically prepared have prepared me to ride the wave right now at this moment. Because if I will not pay attention to what he told me like 14 years ago, I'd probably be a bum right now, broke, you know, probably like drinking a 6 pack every night, jobless, trying to apply for Burger King or some other thing, but right now actually I'm in a way better position. Thank you to that gentleman right there. That he told me 14 years ago. And that did help me majorly, especially now. Thank you. And I'm gonna be more well prepared in the upcoming
I wanted to
years. 'Cause
piggyback real quick on what you were explaining before that
Mm.
I think over the course of my business was that
Mhm,
by me giving people free information,
mhm.
I think I want to say that I got at least a handful of referrals
Yeah,
just from that. And I used to also do like first time buyer seminars,
yeah,
and they weren't paying me for that, but I had a room full of 20, 30 people
yeah,
going through a program to be to buy a house for the first time, and
yeah,
they were being coached by a bank, right? So
yeah.
they're the lender. They had an
Mhm,
attorney. They had an insurance person. They had a home
mhm,
inspector. They had
mhm,
a financial representative. Like
mhm,
literally all these tools, right? I never had that. That I think we're definitely a piece of that pie that we could like
mhm.
help people.
Yes,
But anyway,
yes,
that's all I wanted to say about that is that I got referrals from people probably from just being honest and letting them know, hey,
yeah,
this piece of information can help you, and they're like, oh, okay, thank you. Hey, you have a
yeah,
card, and that's how it
yeah,
starts.
yeah.
So
Absolutely. Yeah, I think you're gonna be doing phenomenal in this company. You are very genuine and truthful. Yes,
so
absolutely.
hopefully this team. So this gentleman he's part of the team,
Yeah,
Francisco.
he's out of Texas. He
Oh,
does
okay,
the
Yes,
he's
I
in
am.
Texas,
Yeah, yeah,
yeah. We got
and
people
then
in Maryland. We got
Ranger
people
Rod is
in
in
Florida.
Florida.
Yeah,
yeah,
Junior and Junior and Jeffrey they work together out of Texas. We got some people in Maryland. We got people in Washington State. We got people in Puerto Rico. We got people. Name it. We got them all over on the
yeah,
whole. That's
yeah,
the beauty about it on the whole
yeah.
aspect on the whole area. But no, gents, definitely, I want to definitely bring this into a circling back around on the whole Junior. Once again, man, I love you a lot. And Junior,
Me
Junior and
too.
I go
Hey,
back since the
14 years, 16 years ago. Yeah.
years ago.
Yes.
And we were from walking around the barracks to where we are right now is a
Yes.
totally night day. We would never think where we
Yes.
at right now
Yes.
with the
Absolutely.
with
Absolutely.
the stuff that we went through. But my goes out to Junior.
Absolutely.
When you look about somebody who sacrificed a lot, Junior is a guy that spent over 10 years overseas.
Yes.
After he got out of the military, he still went out there, continued supporting the mission as a civilian. On it,
Sure.
he Afghanistan, Iraq. He's just stayed there. I was like, dude, what the heck you doing down there, man? You're no
Yeah.
longer in uniform. But this guy had a mission. This guy, when you're
By the
talking
way,
about,
thank you guys. I'm the only one that's not military, so
You're good, man.
a lot
You're
of people
you're
think
you're
you are,
part of the
man. Don't worry.
family. Yeah. You're part of the family, man. Yes, sir.
Mhm.
all right, thank you.
But what I want to say is that when people are raised to focus on what they want in their life and the goals, and then information flow like this comes, they will listen on it. And all I'm saying, like you were saying, Felix, also, we just got to educate people. A lot of times people don't understand. People just going to listen to what the people will listen to people who have never walked the walk.
Yes.
People will value the advice of somebody who will never been through what they want to go
Mhm.
through.
Yes.
Just because they think they cannot do it, they want to make sure you don't do it. You know what I'm
Yes.
saying? And that's something we got to break. I mean, we are our own universe. We are our own people. You know what I mean?
Yes.
You put it, whatever you put yourself ahead of you, you're gonna make it happen. Point blank. It
Mhm.
is what it is. And that's
Absolutely.
one thing we want to make sure everybody understand on that point. But no, overall, I want to thank you guys coming in. Hopefully, this information for everybody, it is great. Please pass this info, everybody. We're gonna start getting this more often. I'm gonna give you guys your QR codes, get your backgrounds, get your pictures going to make sure
Yes.
things are being seen by you guys. And definitely, you guys, I want you guys to utilize this channel also for your own thing. If you want things to do, let me know. And you
Yes.
I've got the system for you guys to run it and do your own internal stuff to make sure we get things. Like I said, we want to pass information out the correct way. We want people to come. Everybody's different. So just because you're the strategy here, does not mean that strategy that's the right strategy for you. Could be a different strategy for somebody else on it. But there's
Mhm.
just the basic foundation of what it is overall coming in. I want to thank you guys for jumping in. Jeffrey from Texas, Junior from Texas, Mr. Felix down
Hey.
from the Windy
Yes, sir.
City of Chicago. Love you
Indeed.
guys. Definitely let's connect again. And like I said, we're gonna get better. Things are gonna look more prettier as we go through. This is a rough job. So like I said,
Absolutely.
nothing's stopping us. Like I said, we have a vision. We're gonna make it happen.
Yes.
And we're gonna look at this video probably 3 years from now, like, whoa, man, that's how we
Yeah.
did it back then. You know what I mean? And now
Yeah.
things are gonna be different. So there's a vision
Yeah.
ahead, like I said. But
I'll
no,
probably be making like 3 times of the money that I'm making now. Be like, damn, man, I remember those days when I used to eat like 99 value menu fries from Wendy's, and now I'm like T-bone steak, ribeye steaks and shit.
I think we could see him now. He's in the dark though.
I
yeah,
know,
we-
man. I'm
Turn on the
like,
car
I'm
light.
like, I'm like Batman. Hold on, every time the
Turn
lights
on the
on.
car
Oh
light.
man,
Maybe
I'll
we
be
can see
like,
him.
oh
we
shit,
see a
hold on,
hand.
man. Oh man,
Hey.
hold on. Hey,
Junior's done. Hey, I'm on
Man,
highway.
I'm
I'm on highway 20. I'm heading back to Texas.
That's what's
Oh,
up,
Okay,
man.
somebody's
Nice.
driving. Who's driving?
that's Jeffrey.
Oh
Yeah.
man, be
Hey,
careful, man. Be careful.
you be safe. Yeah, you be safe, man. It's like Veterans Day, like veterans today, they either drunk or high. So you be safe.
Ooh, wow.
Oh yeah.
So even on
Oh,
that
yeah,
note, we still got companies out there that utilize marijuana as non-smokers. So
Of
if
course.
you have anybody who's using marijuana on the medical, get a contact. We can definitely help them out.
Absolutely, man. They can help me out too. I give them like a free call. Like, yo, you got extra. You like send over here to your boy, man. Be good, my
Mhm.
friend.
All right.
All right,
Yeah.
guys, have a blessed one. Thanks for your time.
Hey, you
Enjoy
too,
it.
man. Yeah.
Jeffrey,
Hey,
drive
be,
safely,
be
brother.
safe, man. Yeah.
All right,
Be
guys.
safe.
We'll talk to you later.
All right, fellas.
All right,
Nice
man.
to
God
meet
bless,
you.
man. You guys have a great night.
All right,
Okay.
blessings. Take
All
care.
Okay.
right.